Alright, this is Bob Joyner, and I'm recording this on Sunday, the 31st of May in the afternoon, and getting ready to start trading again this week. So I wanted to look, last week we looked at the S&P 500. In this video I want to look at the NASDAQ 100 index. I'm using NDX-X for that. And previously, we were looking at Ichimoku and areas of support and resistance. As with the S&P, so with the NASDAQ, we came down on that daily chart, as I mentioned in last week, and found support there on the Heiken-Ashi, which is this white line right over in here. But what I want to do is not only look at a different index here for kind of looking at the market, I want to use some different indicators. So the first thing I want to do is I'm going to go ahead and remove the Ichimoku indicators here. And now we're down to a daily chart. So one of the things I want to talk about is using different indicators, but also using different time frames, depending, of course, on which market you trade and what your time parameters are. But for this analysis, I want to drill down to a 30-minute chart of the NASDAQ to see kind of what's going on here. And it doesn't look like much of a pattern at first glance. Just looks like a lot of red and green candles there at first glance, with a lot of gapping measures, as you can see in this market, as it's been kind of choppy, as I'm sure you already know. So again, this is based on a 30-minute chart, so these gaps are going to show the openings, of course, where the market gapped up or gapped down. So another thing that I want to use here on this are Heiken-Ashi candles. I'm going to go up here and I'm going to change the candlestick to Heiken-Ashi. Those of you who are in the chat room know that I like these candles a lot because it kind of adds a little bit more order. Heiken-Ashi candles take away all the gaps and you just see kind of green and red. So there are a couple different ways to analyze what's going on here on the NASDAQ on the 30-minute chart. And one of the ways that we can do that is by breaking it out a little bit and saying, well, what's been happening? Well, so far, one of the things that come immediately to mind is this area up in here, and that's so far I'm painting that as a red zone because it's an area, it's where we've gone up to some recent highs, but so far we're not able to go much higher. Okay, so that's one area I want to look at on this chart. I also want to use our Fibonacci tool, so I'm going to come over here to the draw tool. And I'm going to start from this area down in here, this most recent big pullback before we kind of had this nice upward trend. So I'm going to start down here in mid-May and come up here to the end of May and just kind of see what's happening there. And when we do that, a couple of different Fibonacci lines come up here. We have the 23.6 right in here, so we could draw a line right in here and say, okay, well, that's one area. And if we look at that area, there's a couple different reasons why that might be an area of support tentatively so far. And one is just that has been an area of historical support, as you can see, going back before May, of course, looking at just a 30-minute chart. But once we move back through that, so far that has been pretty much an area of support, but we've been kind of choppy over the last week inside this area. And then Tuesday, of course, we had this big move down in the market on Tuesday, and we came down actually to the 38% fib line based on that series where I pulled in here, which was the 6th of May. Okay, so we had this nice big run up. So that's one way to look at this. Again, so far I'm considering this an area of resistance, overhead resistance. So the first thing you want to look at is if you're trading NASDAQ futures or you're trading intraday trading NASDAQ stocks, whatever, is you want to be able to see what's been happening. And so far, one of the things is that this overhead area has been an area of resistance, and that the 23 has been an area of support. We came down, as I was getting ready to say, last Tuesday we came down to the 38% fib line, and we actually moved a little bit below that, not nearly touched down on the 50%, but we did not hold that, and we immediately sprang back up, as you recall, last week, and came up and stretched actually to some fairly new highs, but again in this area of resistance, hit or hit what I call whack-a-mole, and just whacked back down and now we closed back at the end of the week this past Friday near that 23% fib line again. So those are some ways to analyze it. We can also put trend lines on this thing, and some certain patterns seem to go ahead and stick out for us. Again, if I start down in this area, we could draw some trend lines that look like this, coming up underneath the price to see where we've been finding support. We could also draw lines on top of price, of course, in order to see sort of channels that are there in the market, and do that we might come up with something like that. So the reason for doing all that, again, is not just to have fun drawing on the charts, but it's to be able to manage our trades better. If we are intraday trading or we are swing trading, either way, we need to be aware of lines of support and resistance, where the market has been holding its ground so far, where it's been bouncing. And if we can see these trend lines, then we know also that a break below this area in here, for example, would be a more bearish move, because it would be a break of that trend line, especially if we break below that trend line and that holds. And then even more so if we come down to the 38% fib line, and we come down here, right in this area, right in here, and we begin to break down below this area here on the NASDAQ. And now I'm not trying to predict what's going to happen, but that's one possibility, is that we break the trend line, that this channel no longer holds, we dip below the 38% fib line, and then we'd be looking for a larger correction, of course, possibly, if that happens. And then we'd have to draw some new lines to see where the market's headed next. So it's not beyond the realm of possibility. We've already been down in this area in the last couple of months, so that would not be a stretch to be able to come back down in here. But those are the areas that I'm watching, again, using NDX-X as a guide here. You could also just simply use the Qs and you'd get a pretty similar type story. So I just wanted to give that little recap of what's been happening on the Qs, and then also what we might be looking at if one thing happens, then something else might fall. Hope you have a good week of trading, and I'll talk to you soon again.